Well, I'd like to thank everyone for watching our video here called The Greatest Single Tax Deduction Often Missed. My name is Dwayne White, CDFA Pension Consultant. I will be presenting for you today. As a lot of the business owners begin to prepare for the upcoming tax year, you're looking for more deductions. You're probably getting killed in taxes, and you're looking for probably the biggest tax deduction that most people actually miss. Well, we're going to go ahead and cover some items that will definitely be beneficial to you, and I'm sure you will enjoy. So what exactly is the situation? Well, small businesses pay about 58% of the taxes collected, which represent only about 2.5% of the retirement savings. Many business owners feel like, they're paying more than their share of taxes. And quite honestly, I'm inclined to agree with you. Business owners are feeling like they're getting killed in taxes and they don't know where they can turn or what they can do. Most business owners are talking to their accountants, their CPAs, and they're asking these questions. What can I do? I'm paying too much in taxes. Okay? You want to make sure your taxes are done correctly, but you want as much tax deduction as you possibly can get. So what's the answer? Plain and simple, a company retirement plan can be the single greatest source of tax benefits to your business. It can be huge. Some of the benefits include the 100% deduction of the contribution. 100% of whatever you put away for your retirement through a company retirement plan or pension plan is 100% tax deductible. Plus, the savings grow tax-free. Okay, so year after year and year after year of making interest or dividends or whatever the case might be, those monies are growing tax-free. You're not paying any additional taxes on them. They also allow, meaning the pensions, allows for you to have a higher contribution up to about $352,000 per year. Okay, now, had you been using an IRA or something like that, you couldn't put anywhere near that much money away. Now, I'm just telling you what the maximum is right now. However, if you have an amount that is a little bit more congenial for you, that's probably something that you'll be working with. In addition to that, having a company pension plan can be used to attract and retain good employees. Okay? Now, you're probably saying, well, how is a pension plan going to, attract employees and keep them? Well, if you have most employees know that the traditional pension plan, for the most cases, has gone away. Most companies are using 401ks for their employees' retirement plan, and most employees don't save. Okay? So if you have a company pension plan, it's going to attract good employees. In addition to that, if you have a vesting schedule, and that vesting schedule can be anywhere up to 7 years, they're going to stay with your company as long as possible to make sure they get the maximum of the monies that are put away into that pension plan. Okay? In addition to that, the funds that are put into a company pension plan are protected. You have asset protection. Okay? Whether it's just you and your wife and you're the only employees, or you have additional employees. It cannot be touched through a bankruptcy or lawsuits, so you don't have to worry about them. As opposed to if you're a business owner and you put some money in an IRA or you put some money in a bank account, your creditors or a bankruptcy will have access to those funds. All right? Additionally, there are tax credits on top of the tax deduction of the contribution, plus additional incentives available to pay for costs of having a plan. So how does all this work? Well, you decide how much you want to contribute to your plan annually. Okay? You're probably saying, well, I don't know how much I'm going to make every year. Well, there's different types of plans that you can set up, whether it be a profit-sharing plan. If you make a profit, you decide how much that year you're going to put towards the plan. If you don't make a profit, you don't have to put anything. So there are multiple plans available and combinations thereof that can be utilized. Then you have a plan options design. You would choose the most tax beneficial product or plan that's going to benefit the owner and that the owner is comfortable with. Then you want to select your vesting schedule. Again, I mentioned that earlier. That vesting schedule can be between 2 to 7 years. At that point, you want to fund your plan by tax season of April 15th or November 15th, depending on when you're filing your taxes. Okay? Now let's take a look at a case study of a husband and wife that own a business. Primarily, they are the two highly compensated employees of the company. The husband's making $130,000 a year. The wife only works part-time. She's doing about $65,000 a year. Okay? They set up a 401k since they're both over 50. They're using the catch-up additional contribution to a maximum amount at $23,500. They're also using a profit-sharing plan of about $34,500 each, and they have a cash balance plan in which they're adding an additional approximately $95,000. So the total contributions between the two owners is $211,550. Now they have two employees. Now there are eligibility requirements for each employee. Each employee would have to be, 1, age 21. 2, they would have to have been with the company for at least a year. Now it depends on which plan we're using again and what the eligibility for each employee are for that particular plan. In this particular case, these two employees had only been with the company less than a year. So they did not qualify this year to participate in the profit sharing or the cash balance plan. So 100% of the contributions that went into the plan for this case was for the business owners. So they got to write off $211,550 out of their profit, plus they got an additional 40% estimated tax savings of about $84,620,000 for putting this money into the plan that would have been going towards taxes. So I want to thank everyone for watching this video. We do have an offer for you for an ebook, which is a checklist of the items needed for pension plan retirement. This is a $39 value. Plus, you're going to get a 2015 pension guide, which includes a retirement plan contribution limits, plus our small business pension consultation. Now, this includes a review of your company structure, determining how to best reduce your taxes, and how to maximize your retirement savings and most effectively protect your assets. Okay? This is a $350 value that you get absolutely free. Total for all three of these items, $389. And you're going to get this offer absolutely free for watching this video. We have our upcoming Please watch our upcoming webinar, How to Make a Pension Plan Work for Your Business. You can sign up at pensionwebinar.com. Again, that's www.pensionwebinar.com. Where you would go to our webinar page. Let me just go to that, which this is the pensionwebinar.com page on how to make a pension work for your business. Register, if you see here, register for the webinar. We'll be going over several different items. If you're getting killed with taxes, you need more tax deductions. Looking for ways to save more money. Concerned about having enough to retire. And you're concerned about protecting your assets and your money from creditors, whether when you're sick or disabled or if you die. This will be brought by two different pension experts. Could either be myself, Dwayne White, or Keith Baumgarn. We thank you again for all your time and effort. Again, register at pensionwebinar.com. You can also give us a call for a free business pension consultation at 888-743-8797. My name is Dwayne White with Strategic Wealth Solutions. Grow wealth, enjoy it, leave a legacy. Have a good one.